Imagine you are driving down the highway at 70 miles an hour and you suddenly realize you missed your exit. You cannot instantly snap your car into reverse. First, you have to hit the brakes. Then you make a turn. Only after that can you press the gas and accelerate in the new direction. Financial markets follow these exact same rules of momentum. When a stock's price is climbing rapidly, it has a lot of forward speed. It cannot pivot into a downward crash in one smooth, unbroken motion. Before a market changes direction, the current momentum has to completely run out. Think of it as the upward speed dropping to zero. The buyers simply run out of steam. Watching a car go from high speed to a full stop and then a pivot reveals exactly where the market is headed next, long before most people realize it is moving. Every market slowdown starts with its brakes. On a price chart, these appear as long, thin lines attached to the colored blocks. Normally, when a stock is moving up smoothly, you will see large, solid green blocks. This is the market stepping firmly on the gas. Sometimes, a small colored square appears with an exceptionally long upper tail. This shape is a major interruption to that upward speed. Think of that long upper tail as skid marks on the road. It represents a moment where buyers tried to push the price even higher, but sellers slammed on the brakes and rejected the advance entirely. Spotting one of these long tails at the peak of a strong rally is the ultimate early warning that the market is beginning to stall. Once the brakes are applied, the market has to physically turn itself around. Just like a heavy truck, this is rarely a smooth, graceful motion. Instead, the market performs a clumsy three-point turn. It pushes up to a high point, fails, pulls back, and then tries to push up one last time before failing again. This M shape reveals a market that has hit a ceiling. By trying and failing twice to move higher, the buyers have officially run out of gas. This same pivot happens when a falling market turns back upwards, often pushing down twice to form a W shape before finally lifting off. These specific shapes are the definitive markers of a market stuck in the middle of changing directions. Now we just need to see when the turn is finished and the car is safely driving away in the new direction. This acceleration happens when the market finally breaks the floor it established during its turn. The turn is complete when the price falls below the lowest point of the M shape. That aggressive move past the previous floor is the signal that the market has committed to its new path. This downward break is the final confirmation. The old movement is finished, and the new trend has officially begun. This is a realistic chart showing the price movements of a stock. To the untrained eye, it looks like unpredictable chaos. But we can find the car's path if we look closely. Right here at the peak of the rally, we see the brake lights, that long upper tail showing where the sellers rejected the move. Following that, the pivot reveals itself. We can trace the M shape as the market tries and fails twice to move higher. Finally, we see the acceleration. The price drops below the floor of the turn, confirming the market is driving away in the opposite direction. Reading a chart is simply a matter of watching the physics of a turn. By looking for the brakes and the pivot, you can stop guessing and start seeing the road ahead. Subscribe for more guides on how to read the markets, and I will see you in the next video.